The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 21st terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do it is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets, what the buyers and the sellers, what the bulls and the bears are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too early. Give us a call, 877-927-6648. Of course, internationally, 727-445-1044. So let's go ahead and get this show started on terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 28 points. She's trading at 17,832. S&P's up 5 at 2088. Nasdaq Composite is flat. She's trading at 4837. Russell 2000 back 7 points right now at 1149. Gold's off $20, trade at $12.71. Silver's down 20 cents at $17.13. Light sweet crude back 59 cents at $49.37. Leading the charge here to the upsides dollar-wise, you've got Imperva Inc. That's up $4.70. American Science and Engineering up $4.40. Equinix up $4. OSI Systems up about $3.50. So no real big movers and shakers to the upside. To the downside, individual stock-wise, it's Priceline leading the charge. We know that's just consolidating up at the highs. It's going to go test those highs. That's trading off $9.70. That's trading at $13.32. Regeneron Pharmaceuticals off 2%, about $7. Chipotle down $7. AutoZone off 5. The IBB down about 460. Testing or getting close to testing a swing point low on very light volume out there. Sorry about that, folks. Got yanked off the air by the FCC or somebody like that. I don't know. We just happened to drop the connection, but we're back, so that's good. So let's try to get to a number of these questions. Geez, you never know. Maybe we won't have much time together today. That would be a sad state of affairs out here. But let's try to get to some of these questions out here with the flat market. That makes a lot of sense. So the first question that came in was yesterday's candle inside of the Dow a shooting star? A very good question. Looks like a shooting star, smells like a shooting star. Actually, it was not. It was a bullish candle. You see, if we take a look at the Dow, we know that what the Dow did on Friday was closed at the high, or was made a high, not closed at the high. It made a high of 17,733.44 pennies. Yesterday's open and the low of the session, 17,736. So 17,736 versus 17,733. What does that tell us? Number one, you've got a gap. Now, gaps are your friends. Gaps are a sign of strength or weakness. Gap ups, sign of strength. Gaps down, sign of weakness out there. So that's the first bullish piece of yesterday's candle versus a bearish piece. The second is again, folks, apologize for the technical difficulties that we're having here. I promise we're going to try some way to get through this show out here. I could probably come with a backup plan if we need to. So we were talking about the Dow, although we've been piecemealing this in together, specifically with regard to the candle from yesterday. And the question was that a shooting star? No. Another element with regard to yesterday's candle, the body of that candle session, slightly too big. You want to see a small-bodied candle. Yes, the wick, in this case here, the upper wick needs to be at least twice the size of the body. But this is a bullish candle from yesterday, not a bearish candle. If somebody's telling you otherwise, they need to come to the Steve-O School of Candlestick Charting, and then I'll go ahead and be able to get them on the straight and narrow out there. So that was the first question. Now, with regard to the Dow and what is it doing, well, let's go take a look at the advanced decline oscillator. Still above zero. It is the only indice that is above zero, but it just adds to the bullish case that the Dow is making. Can it be the Dow that's going to go ahead and move things higher out here? I don't know the answer to that. It would be easier if the Dow was able to get above that little descent, a rising trend line. That's a short-term trend line because it's coming off of the February lows out here. If it can get above that, then that answers the question that you're going to the May highs. In fact, you're going to go beyond the May 2015 highs would really be its message. Now, you got to take this one step at a time. What does the Dow actually need to close above today to give you another bullish message out here? Give me a second here. Let's see if we can get this chart up on the screen. Let's see if I can figure that. Oh, I know. I got to just put my data panel up. I'm going to go ahead and give you the exact number. And that way you've got, there, it's popping up on my screen out here. So the exact number is going to be 17,815.27. It's already trading above that. It's trading at 17,821. Sound. So we've got a question with regard to sound inside the den. Steve-O, maybe you could respond to that. That would be great. Mic on. Now how about that? Now you guys got the sound there? Sorry, guys. This has been a confusing moment out here. So here's what we want to pay attention to, and that is this. Let me give you the closing price today inside of the Dow that says that it is the buyers that are in control. That is in the exact price, 17,815.41. I mean, right to the penny out there. If you close above that, then the Dow has given us an additional message. Maybe these markets are giving us messages with regard to the Brexit, whatever it is that you want to call it out there. Certainly the Dow, we've got the advanced decline oscillator above zero and rising. That's a beautiful thing. You got nice big bullish candle. Yesterday, that added to the key, or at least the key added to the bullish engulfing candle that formed out here on June the 16th. So the next move for the Dow is getting above its trend line out there. So I hope that answers the question with regard to yesterday's candle formation. Maybe to just kind of stick around here with regard to the Dow itself and the question that came in. Laura in Arizona sent an email and asked if I would go ahead and take a look at the Dow Jones Utility Index, and I will. Now, what Laura didn't do, so if you're going to send me an email, help me out just a little bit by letting me know what time frame it is, if you're in the trade, exactly what it is that you're looking for, and then that would be easier for me to help you take a look at that aspect as well. But that's okay. We can fly blind out here, and let's take a look at it. Let's take a look at the bullish side, the bearish side of the Dow Jones Utilities out here. Let's do this. Here is let me see if this is the chart that I want to grab. Yeah, let me do this. Here's the Dow Jones Utilities. I'm going to pull. Oh, come on, work with me. We're live on the air out here. Okay, let me do this. There we go. So let's pull open this chart. We're going to have to do most of this when we get back from the break. But here's a daily chart for the Dow Jones Utility. Now, what we know about the Dow Jones Utilities Index versus the Dow itself is the following. We know that it had been trading in a nice little consolidation range out here. That is the black rectangular space that you're looking at on my screen. But guess what? Back on June the 9th, the utilities broke above the consolidation. That says the utilities want to move up to 705.71. When we get back from this, let's go take a look at some longer-term charts for the Dow Jones Utility Index. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We were taking a look at the Dow Jones Utility Index before we went to break, and we were looking at the daily chart. Now, the daily chart, you're going to see really two rectangular boxes. The larger one happens to be the one that shows that consolidation, right? A double top, a double bottom. That gives us our range for the most part. Once you break to either side, then we have what's referred to a measured move. So the move inside the utilities should be equal to or greater than that consolidation. So, and at this stage here, that would say you're going to be in the range of about 705 or so, give or take. Now, the level to be watching with regard to downside activity and coming back and testing the top of this consolidation, that's always a possibility. That would be in the 672 level. The level that the price point you would want to be watching today is 682.79. If you were to close, not you, but if the utilities were to close below that, that would then suggest that price would come back and actually test the top of that consolidation. But at this stage of the game, utilities are in a strong buy bull mode out here. That is only the daily chart. Wait till you see what happens. And I do want to thank Laura for even asking about this question, because the question prompted me to go out and say, hey, you know, I really don't take a look at the utilities index too much, and I really ought to. So what I did, you got to be, if you're listening in, you got to be watching this chart or go back and replay it, because talk about some interesting clues with regard to where the Dow is headed. Now, this is a long-term chart out here. And the top portion, by the way, the top portion of the screen out here is the utilities index. This is a monthly chart. The bottom portion is the Dow Jones Industrials. And, of course, you can see the symmetry with regard to the directional price movement. You can see how they are tagging along with each other out here. And the interesting thing about the utilities is a couple of different patterns that are out here. Number one, if we just take a, well, you're going to see these vertical lines on the chart, both on the top and the bottom. So if you take a look at the Dow Jones Utilities, let me go ahead and just do this. That's going to be a little bit easier for you to see. So if we take a look at that, the Dow Jones on a monthly basis made a high back in December. This is not going to surprise you, December of 2000. Right? The next high that came in was right here in December 2007. Now, you can see that you had a nice big Fibonacci expansion between 2000 and 2007. You had a nice big Fibonacci expansion all the way up into the time frame of January in 2015 when the utilities had made its high. We'd call that a three drive to a top pattern. It's really textbook with regard to that pattern. Remember, nothing more bullish than a failed bearish pattern out here. Well, on top of that, I'm going to go ahead and delete that now, just so you had a picture of it. Well, I was going to try to delete that. Let's see if that does that. Does that do it? Oh, my goodness. What the heck? Let's see if I do this. Did I do that? Why can't I? Oh, I wanted to delete that for you. Let's see. Why isn't it? It's not even grabbing it. Well, I'll be a son of a gun. Okay, so let's just say Stevie can't delete it for some reason out here. Look at the wave count out here. This is off of this is a monthly chart. This is off of the lows here in March of 2009. The way that I take a look at these wave counts is as it was making that three drive to a top pattern. This is back in January 2015. You had a seventh wave out there. You know how we love those seventh waves. We bow to those seventh waves out here. And you did have a nice good old bearish reversal signal that took place, obviously, in, well, in this case here in February, January, February. This, I would think it would have been January. I don't know why it's showing showing up on my screen is February, but we're gonna say that's because it was February probably. So you've got that nice bearish reversal signal out here inside of the utilities. But guess what, folks? This is where I say thank you, Laura, for even asking me. What I wasn't paying attention to was the fact that those two very bearish-oriented patterns, that 3 drive to a top, that 7th wave to the upside that had been confirmed out here, well, back in the month of April, price blew right back above that level. Right back above that level. In fact, we saw here for a couple of months, monthly chart that we're looking at in April and in May, price really coming back and testing the breakout of the top of that level out here. What does this say? It says and you can see the directional movement and correlation between the industrials on the bottom portion of our screen out here and the utilities. So the utilities index is telling us that it's headed higher. And so too is the Dow Jones Industrials. We just got to get through some of this other stuff that seems to be in the way, whether it's the Brexit or whatever other things that are going to be dreamt up out there. But at this stage of the game, the utilities are saying on a monthly basis they're going higher for a while out here, and it's just a matter of time before the Dow goes and tests that May 2015 high. That sucker gets taken out. Its message is markets are headed higher for months to follow. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 11. S&P is up 3. A number of questions coming in about gold. Another one just while we were on the breakout there. So let's go take a look at it. Let's put this on. The question that just came in was, do I see any cause and effect out here with the change in the gold margin out there? Does this tell you anything about the gold market? You can answer on the air if you want. I'm going to go ahead and answer on the air because many other questions about gold as well. So we've got a couple of charts for each of us to go ahead and take a look at to assess where what the markets are communicating to us. So yesterday I gave you a number to pay attention to and said, hey, if gold closes below that, that tells you that sellers are the ones with the upper hand here. That number changes, as I mentioned. It changes from day to day, moment to moment for the most part, but it's more day to day. The number right now that I'm looking at a different screen, by the way. It's 1278. 1278 is the number you want to write down on your pad of paper. It's trading at 1272. If gold closes back above 1278, right now it's 1278 to 810, but let's just call it 1278. We'll make it easier for it. If it closes back above that, no real sell signal tells me that buyers are the ones that are still in control. You close underneath 1278, it really confirms what it is that we're going to look at on the next set of charts out here. Here is the open for the current contract for gold Sunday evening. Gaps down right at the open. A number of contracts behind it, about 4,500 contracts. Now we can see that gold here moved higher into about 6:30 in the 6:30 in the evening. It's a 10-minute chart that we're taking a look at. How about that for mathematics? 1830 equals 6:30 in the evening, East Coast time. Now what we can see here, that level, by the way, was 1296. Now perhaps interesting, at about 8:10 in the evening yesterday, you saw gold get up to a price level of 1297.40. Runs right into that gap out there, which acted as resistance. Remember we talked about gaps are your friends? Gaps to the downside, right? They're friends to the sellers, bears. Gaps to the upside, those are friends to the bulls until those gaps fail. Well, you did not see this gap fail at all. In fact, that was just simply time to bolt in and continue selling, which is what we have seen. This looks like here, when you see this little line, so from last night, 8 o'clock, all the way up into about 6:50 this morning, you see how you've got that nice linear look to it? This is, I wish I could prove this. This is how I interpret that. This is so linear that you had a trading desk or a couple of trading desks where they got the orders to go ahead and start selling gold without spooking the marketplace. Look at how linear this is all throughout the evening, all the way until 6:50. And at 6:50, they must have unloaded everything that they wanted to, and then you had the final dump with regard. So that trading desk, whatever their orders were, they were fulfilled, and it got to that 7 o'clock time frame, and it was boom, let it go. Big volume there, 10,000 contracts to the downside. Now, is that margin related? I don't know. Here's what I can say in interpreting the charts. That move is so linear. It was sell, don't let anybody know, don't spook the markets, don't let things get out of control. Just a nice gradual exit from long positions that some trading desk was in out there. I wish I could prove it to you. What I can prove to you is that closing below 1278 is not a good thing for gold. Don't let me prove that to you. Let's go take a look at some charts out here. Look at this chart here for gold. By the way, gold has rejected resistance in just about every currency that there is. Here's a chart of gold priced in 6 different currencies. The top chart is gold priced in yen. Guess what? It's run into resistance. It's in a downtrend. Take a look at the tops out there, declining tops. The next chart is gold priced in euros. Perhaps a more interesting chart considering everything that's going on over in Europe. You would think that if traders, where the real money's at, if they really believe that there was going to be an exit, that gold priced in euros would be screaming to the upside out here. But it's not. Instead, what gold did was it did a double top test out here, if you will, a test of its previous swing point high on June 16th. Acted as resistance since then, has been trading lower. Nothing significant, but has been trading lower. Take a look at gold priced in South African Rand. That is the third chart on my screen out here. Ran into resistance up at its highs, has been trading lower. It's now taking on its swing point from June 7th out there. So three currencies, the same message, didn't have any energy to get over the resistance levels. Hey, take a look at gold priced in U.S. dollars out here. That's really the fourth level out here. Now, coming off that nice trend line from December 31st, if we take a look at that trend line, you can see the same trading session. Everything was going on at the same time. I believe this was last Thursday, Wednesday, June 16th. You look up the date. I'm not sure which day of the week that was out there, but price ran right into that rising trend line, tried to get back inside it, tested it, rejected it, said sayonara, adios, amigos out here. Take a look at gold priced in Australian dollars out here. Double top, triple top, however you want to look at it, been trading lower. A failure up at these highs. And then you've got gold priced in Canadian dollars out here. The same thing. It looks very similar to gold priced in U.S. dollars. So I don't make this stuff up, folks. You know, you're looking at multiple currencies out here. If we were looking for signals with regard to gold being a fear currency out there, which it really is, it really should be, right? We're not seeing gold break out in any currencies that I can see. Maybe I'd go do more. And I had somebody write in and ask me if I would go ahead and take a look at currency pairs out there to look for clues. Well, as part of the Arthur in London, as part of answering that question for you, let's consider gold to certainly be one of those currencies out here. So all that I can see is that gold has run into some real stiff resistance. And so that gap down on Sunday, moving back up to resistance and selling off, says just be careful. If we take a look at gold as well as its let's do this. Let's go take a look at change this back to a daily chart. Let's go take a look at our market profiles because those are beautiful things out here. So let's go take a look at gold, get a feel for where price should move to. Let's go ahead and turn on the daily and the weekly profiles out here. So as we take a look at it, you can see that gold in one fell swoop is down below the daily as well as the weekly TAS market profile high. Now, in the daily, it's down below the bottom of that box. Now, let's go ahead and put this. I'm going to turn the volume indicator off on this chart. That is not as essential to what we're looking at. So these are the numbers that you would want to be paying attention to. I gave you a number of 1279, something like that. With regard to the bottom of the TAS market box, which had a bias to the bullish side because the point of control was closer, albeit ever so slightly. It was closer to the bottom of that box out there. 1274.90 is its number. It says if you close below 1274.90, then where it's going to make its next run to is very likely 1230.50. So those would be the numbers you'd be looking for. I would say more likely than not, it says you're going to go run down to 1193. Will it find support at 1193 or 1230? I don't think so. If this really, so maybe this is all a part of the markets really know what's going to happen during the Thursday/Friday Brexit out here. But at this stage, nobody is getting freaked out with regard to currencies and saying, I want gold. I don't want to hold on to these paper dollars out here. It's not happening anywhere around the globe. Key levels of support are being tested as we speak. I don't know how it's going to end the session, but you've got the numbers. This is Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Real flattish market out here, so which is great. Seems everything happens for us, not to us, right? A number of questions that came in between yesterday's show and today's show, so it's given us the time to get to all those because not a ton of changes inside of the markets out here. The next question that we want to go take a look at, this coming from Joe in St. Louis. He was asking about the strength of the U.S. dollar index and its impact on the Dow, because you hear so much about the U.S. dollar's index is getting stronger and everything's going to go to heck in a handbasket out there. And let's just go see what the reality is. Okay, let's take a look at make fear your friend, not your enemy. So here's a chart that shows that's a long-term chart, right? So we've got a monthly chart up here showing the Dow Jones. That's at the top portion of the screen, and the U.S. dollar index at the bottom portion of the screen. By the way, the U.S. dollar index actually bottomed in March of 2008, right? So that's when this is, by the way, we're looking at closing prices. Whenever you look at a line chart on my screen, you're looking at the actual closing prices out here. So the U.S. dollar index bottomed, right? Bottomed in 2008. That means that the U.S. dollar index has been rising since 2008 out here. And our stock markets have done what, right? Since 2009, our stock market, or the Dow, has been doing what? It has been rising since then. So all those people that want to absolutely tell you that with regard to the markets, a strong U.S. dollar is going to crater the markets, you can just take them off of your screen. Don't read their articles. They're just trying to sell you something out of fear, because are there some correlations? Yeah, but let's look at the long term. Dollar bottom in 2008. You had a kind of a double test of that low back in April of 2011. Ever since then, Tom coined it correctly. It's been the king out there. It's been the king dollar. It's been moving higher. Our markets have been moving higher as well. Yeah, so from day to day, I'm giving you the longer term picture out here. Now, interestingly enough, so that really, I hope that answers, Joe, I hope that answers your question. And I'm looking at, again, when you send me emails, just give me just a little bit more information, the time frames that you're looking at. But I don't mind that you don't do that, because then you leave it open. I'm going to say, okay, I'm going to put up some different time frame charts, and let's just go see what it is that we can take a look at out here. Now, if you take a look at that, this is kind of interesting. If we just simply draw a diagonal line from the highs this is a closing high back in 1999, to the high, closing high in September, October 2007 out here. The interesting thing is look at where the price moved to the downside in the September, October 2015 level, as well as the move down in January in 2016. Is that uncanny? That price basically stopped right on that trend line. A significant level of a trend of support held on each of those moves. And now we can see is this little trend line, again, closing prices, what you and I are looking at off of the February 2015 highs out there. Was it February or May? I think it might have been February with the closing high out here. But just take a look at how prices now been able to break above that trend line out there. So the utilities are saying the Dow industrials are headed higher. The Dow's broken its descending trend line. Let's not get too worried about the U.S. dollar index. What this does tell us that there's some downside action. Let's say these charts are all wrong, or not the charts are wrong, that my reading of the charts is just hogwash. It's just garbage. It's crapola. It's terrible out there. Because you're looking at it too, so you can look at it with your eyes and make your own determination out here. That's why we do. That's why we show these live charts. Where would the Dow likely fall to? Well, where it would likely fall to first is the descending trend line, right? Try to get back inside it to the downside, and then you'd have probably that rising tops off of the 2000 and 2007 highs out there. So go ahead and put that on your charts, and we'll see. And in the case of the U.S. dollar, let's say the U.S. dollar really does pull back out here. Well, big pullback is going to take it to the trend line. Where is that going to be? This is a monthly chart, so heaven knows, because it's going to continue. That trend line is going to continue to rise, but it's probably in the 85-ish type range out here. But our markets have moved higher. They've been just fine with a rising U.S. dollar index out here. I don't know why everybody is freaking out. Other than short-term wise, they can show you some examples short-term wise, and they can try to sell you on fear and stuff like that. They ain't no fear. I gotta get one of those shirts that says no fear, right? And then that's gonna make it easier. Okay, so we got through that question. Now to Arthur in London. That's a beautiful thing out here. Arthur in London was asking me if I would take a look at currency pairs for clues as to the Brexit out here. So I went ahead and let's take a look at our currency cross pairs out here. Let's see. I started to do some work on this, I think. Let's take a look at the euro US dollar. Okay, yeah, there's the work. So here's what we know about the euro US dollar. Now, it's a daily chart, and the first trend line that you're going to look at is the one that goes back to the top in 2014, May 8, 2014. Now, what we can see here with regard to the euro is it broke that trend line. It broke that trend line. Let's pull this back. It broke that trend line, it looks like in February 3rd to be exact, with a nice wide-ranging bar to the upside. So that downtrend that had been in place since 2014 was crushed. It was broken. Price moved higher. And then it moved higher just for about 4, 5, 6, 7 days. February 11th, quite frankly, was when it made a short-term high out here. Pulls back to where? All right, pulls back in essence to that trend line. See how it's testing? Let me pull this back a little bit here. See how it's the larger red diagonal line price was testing it, rejected it in a big way, quite frankly, on the trading session here of March the 10th. So that's a big rejection here inside of the euro. So this is saying at this stage here, now the euro has also, ever since the lows out here in 2015, December, you've seen this nice little rising price channel out here. So at this stage, the call with regard to what the euro wants to do is it looks like it wants to get up to a horizontal level of resistance. And that horizontal level of resistance was really begun back in February of 2015 at a price point of about 115. That is the area to be watching. To the downside, it's not complicated as well. If the euro breaks through this rising price channel, then that trend may very well, let me try doing that again, may very well, hey, I can do that even quicker, have come to an end. But not until we see that broken, tested, and so forth. And I would say watch the lows of June 16th. But at this stage of the game, I don't see anybody freaking out when it comes to euros. It looks just kind of normal patterns, normal price channels, normal trend lines that are in place out here. And upside action, it's got the 115.30-ish area where it's going to potentially find resistance. You break above that, then what it needs to do to continue motoring on to the upside, and that would then do what? That would then go ahead and send the U.S. dollar index to the downside out here. And that's very much a possibility, but it's that 115 area, 1.153 and change out here that you want to be watching. If we take a look at the euro Japanese yen, used to be one of our favorite currency pairs out here, but the carry trade seemed to have just simply vanished into thin air. And when it vanishes and it doesn't correlate, Stevie just simply sticks it on the shelf. But that's really not why Arthur was asking the question. If we take a look at the euro compared to the Japanese yen, major descending price channel out here, really comfortable with the top of that descending price channel, the bottom, so-so, but plenty of touch points out here. There is nothing bullish about the euro versus the Japanese yen. We get back. Let's take a look at the euro versus the Great British Pound. That's coming back and testing a key level of support as we speak today. Steve Rhodes, TFNN.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Just a few minutes here to finish things up. So this will answer Arthur's question in London, yours as well, with regard to what are the markets communicating to us. It's been a great session, I think, this hour, because we've taken a look at they got to keep you glued to the TV or something, right? And the only way to do that is to scare the living daylights out of you. And not that you're scared that much, but you should be, because all of the talk is that your portfolios are going to get crushed, and maybe they are. The charts aren't saying that. The chart's not saying that at this stage. We haven't seen people running after to exchange their dollars for gold in any currency whatsoever. We haven't, so that's been selling off. Makes you say, something to think about. With regard to the currency market, really relatively orderly out here. In the case of the euro and the Great British Pound out here, nice rising price channel. Doesn't mean that it can't break it, but prices come back to a level of support that in essence began back in November of 2015. Now, if it breaks through this area, right now the low of this trading session has been 0.7654. That's how many pounds it would take to buy a euro out here. Then it says you're going to need probably less. You'll need maybe about 0.7565 pounds out here. This should be a good level of support, a horizontal area out here. But right now, it's just up against some nice, nice little rising price channel. So I don't really see any. I don't see any signs out here in the currency market, the metals market, that's giving us any signals that people are really freaked out. It doesn't mean that it can't happen. That's the, I wish I could guarantee it, but the charts aren't saying that. If we take a look at this, is the interesting thing, too. We looked at this yesterday, or we began looking at it. Here's the FTSE, right? So here's the FTSE over in the UK, trying to get back up into its trend line that began in February of 2016, very much like most of the markets here in the U.S. So doing the same type of thing out here. Now, look, the FTSE's got a significant level of resistance, this little downtrend line that it began back in April of 2015. So looking a little bit like the Dow. No, it doesn't look like the Dow. The Dow is already broken above that descending price channel, but descending trend line as well. So, but that's going to be a resistance zone, probably around 63.16. Then the FTSE would need to get above 64.16 and be off to the races. To the downside, that's always pretty simple. It's going to be the swing point in February. That would be the downside action. If we take a look at the DAX in Germany, they're not scared. They're not scared of anything. There's no fear, and I mean that in the nicest sense that I possibly could come up with, because I hate when people talk about there's no fear in the VIX index. And I don't even know what the heck that means. It just has no meaning out there, but people like to say it. There's no fear in the DAX from the standpoint it formed that nice little island bottom. You and I looked at this yesterday, and the last time that we saw an island bottom was in 2012 or 2013. 16, I think it's 2013, 3 years ago. And that formed a substantial bottom. Now, if it's going to be a substantial bottom inside the DAX, you had some nice follow through today to the upside inside the DAX, confirming that island bottom out here. However, it's got a resistance zone, 10,486 or so. That's got horizontal as well as a diagonal resistance level. But you break above that, then it says that's going to potentially head all the way back into the December 2015 level. To the downside, right? Nothing more bearish than a failed bullish pattern. That's what you have in place here for the DAX. So if the DAX closes below the June 16th low out there, that says she's going to go ahead and make a beeline for those February lows. But that is not the message of the markets right now. Not if we take a look at Japanese candlestick charting. Not if we take a look at what's going on currency-wise, both paper currency, hard currencies out there. And, if there's new information, look, all I am, the markets are the storyteller. I'm just the narrator. A damn good one, though. Just a narrator, and we never know what's going to happen when we flip to that next page out there. But I will help you read that next page when we get that information. Folks, I just flipped to the next page. It says, stay tuned for David White. And because this is Terrific Tuesday, we've got the Tom O'Brien Show from 3 to 5. Andy Heck taking it home from 5 to 6. Have a great Tuesday. We'll see you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.